Look, the market isn't random. It's a machine. And right now, we're going to decode the exact feedback loop that smart money is using to get ahead of your trades.
So you're trading Nvidia, huh? You're glued to the price action, you're listening to the earnings calls, you're buying the guidance. Well, I'm here to tell you, you're completely wrong. What you're really trading is the physical hardware coming from its most critical suppliers. And the problem is you're trading with a massive, dangerous delay. Let me show you what I mean.
45 days. Let that sink in. 45 plus days. That's the lag in official U.S. trade data. The numbers you're basing your trades on? They're ancient history.
And listen, this 45-day lag, it's not just a slow spreadsheet update. It's a structural weakness in the market. It's a gap. And that gap is exactly where the algorithms hunt. So what are they doing? It's called data latency arbitrage. Fancy term, simple concept. It's all about exploiting that time gap between the real, physical data coming out of Korea and the slow, fuzzy, soft data you get in the US. This is how they predict price moves before they even happen. Okay, so if US data is uselessly slow, where do you look for the truth? You look to South Korea. Think of it as the market's real-time dashboard. Let's break this down. The US, that's the architect. It creates the story, the demand, the hype. But Korea, that's the dashboard. It gives you the hard, cold facts, the physical volume. And here's the kicker. While the US is stuck on a 45-day delay, Korea drops new data every single 10 days. We're talking about the fastest official data on the planet.
And this is what we're talking about. This is the proof. This is a high-bandwidth memory chip from SK Hynix. That's Nvidia's #1 supplier. So when Nvidia's CEO gets on TV and talks about future demand, these are the physical things that have to get packed in a box and shipped. This isn't a forecast, it's reality.
Right, so when I say hard data, don't picture a chart. Picture this. Physical shipping containers stacked high, loaded with these exact components, leaving a massive port like Busan and heading straight for the US. That is the supply chain in motion, and you can track its volume almost in real time. So how do the algos use this? It's simple, it's brutal, and it's incredibly effective. They run an algorithmic cross-check. Their only job, to see if the hype is real. It's a 3-step process, super simple. Step 1 is the hypothesis. A US tech giant, say Nvidia, announces some new amazing product. Step 2 is verification. The algorithms immediately scan Korea's 10-day export data. Are they seeing a spike in shipments from Nvidia's key supplier? Yes or no? Step 3 is execution. If that data validates the story, the money pours in. But what happens when it doesn't? That's when you get a false signal, a divergence. It's a mismatch between the story everyone is telling and what's actually happening on the ground. And let me be clear, this is the single most dangerous moment for you, the retail trader. All right, listen up. This is the divergence trap. This whole scenario is basically designed to take money from traders who don't have this data. Okay, look at these two scenarios. Scenario A, validation. Everything lines up. The US company gives high guidance and Korean exports are screaming higher. The result? A healthy, sustained rally. But now look at scenario B, the divergence. You still get that high guidance, that great story, but the Korean export numbers are flat. The supply chain is saying nope. And what does that mean? It means we've entered a distribution phase. This is when the institutions, the ones who are watching the hard data, start quietly selling. They're offloading their shares to you, to the people who are still buying the hype. And that is the trap. You're buying the top, you're excited. You're convinced by a story that the physical supply chain already proved as false weeks ago. Okay, so let's fix this. It's time to recalibrate. You have to stop looking at lagging indicators and start using the one that smart money actually relies on. Those quarterly earnings calls you wait for? Lagging. The corporate guidance they issue? Lagging. That amazing polished story from the CEO on TV? Totally lagging. The only true leading indicator, the one that tells you what's physically happening in the tech economy, is that 10-day Korean export data. Period. So step 1 is simple. You have to ignore the hype. The story is built to get you excited, not to tell you the truth. And instead, you watch the data. The real, physical, undeniable data coming straight from the manufacturing heart of the entire global tech industry. So next time, before you hit that buy button, before you jump into that hot tech rally, you need to stop and ask yourself one critical question. The story says buy, but what does the supply chain say? Because I promise you, its answer gets here a month and a half before anyone else's.